Hey traders, Nick here recapping the week ending 427. It's Friday. The day is a disappointment, so I guess you can chalk it up to a win for the Bears. Only because the Bulls had a huge rally overnight and they couldn't hold on to it. A lot of stocks went red. Some are way off the highs. The Qs were definitely... If you didn't book profits at the open, you lost the profits. And that's why every morning when I send out the write-up, I say book profits fast and early whenever you have them. Because you just can't depend on anything right now because of the VIX is high. If the VIX is low, then there's no hurry. But the VIX is high, machines are nervous, they start trading fast. So having said that, I'm not as hard and judgmental on the Bulls as I would have been if not that this is the day after a huge move yesterday. You can't ask the market to be up 2% 2 days in a row when VIX is this high. So if we close where we are right now, which is flattish green, let's call it flat markets and down VIX. The VIX was up this morning, but now it's down 3%. So if we close like that going into the weekend, then we have an even starting point for Monday. So the week is a push because, well, the good news about it is we bounced off of the lows hard, and that's good. And the also good news is that now we have some patterns that are, well, here's one of them. This is the Dow, the DIA. So that's if it happens, we're right here-ish. If it happens, this is jumping the gun, then we can have a rally based on this little pattern. Why do I say that? Because I do have another one right here in front of me. This is, what is this? The S&P, similar. So you can see the dip tested. This is another test. They did better, higher lows. So that's good. Even if we fall a little bit more and do it in 3 phases, then the move will be higher. Okay, so that's not a forecast, it's just a potential. So you can tell that this scenario lost to this scenario, and this scenario that we played out, that we drew ahead of time, like we did these 2 things, is playing out perfectly. So another dip here wouldn't concern me much as long as we keep setting higher lows, nice, no panic. Now, having said that, next week is a huge, to say the least, which will has the potential to make or break it. Okay, so here's my prediction that next week has the potential to, and I'm going to put 2 boxes. Oh my gosh, where is it? There we go. So this is the low, right? This is the recent low. This is the February low. This is the recent low. I'm going to put a box somewhere here and a box somewhere here. So these 2 are in play next week. Starting next week. That's my opinion. Why? So we have earnings. Just to name one company, Apple. Okay, still going. We have reports for inflation. That's what caused the tizzy. To that, we have jobs numbers to come out first. ADP midweek, I believe Wednesday before the market opens. Peak, but they're not that close to the actual government numbers, which are on Friday. And on February 2nd, a hotter than expected government report, jobs report, caused the start of the correction, wage inflation. I think this is abated since then, but having TNX, the 3% rate just above where we are right now, is still a concern. But we also have the Fed, which is a direct impression on rates. Okay, so it's almost a no-win situation for the Bulls. Why do I say that? So if rates fall, that's mathematically going to put downside pressure on the banks, which are a huge part of the market, right? And if that happens, bonds will spike. And traditionally, bonds and stocks trade in opposite directions. So the stocks will fall. If Fed does not raise rates or says something that they're not too hurried to raise rates, that's the scenario to bring that. Now, if they do raise rates and we get a bad report on jobs because it's hotter than expected, then the rates spike. That's what caused the problem to begin with. So chances are the stocks are going to sell off anyway. So going into next week, I definitely have to be cautious. If I'm long markets, I have to defend. Today I defended some longs in LMT, Lockheed Martin, and MMM. I just defended them ahead of time. I paid a few bucks. If you have thousands at risk, it's worth it to defend them. How do I defend them? Either directly with puts on the stock I own, or a general put position in the S&P. How I can buy puts at the money 3 weeks out, 2 weeks out. It costs some money, but it's so I can sleep knowing that if we open down 2, 3%, 1%, I'm making money to offset some of the losses. I don't leave anything to chance, or I don't leave a lot to chance. I cover the oh crap moment, so to speak. So next week is huge and almost a no-win situation for the Bulls. Okay, having said that, we do have some levels, and the good news about it is I'm not going to go into details because if you have any questions, you can let me know. But it's higher lows going on. That's great. We do have a few. Apple, I would say, because it's a big guy and it's going into earnings, and people expect terrible things. So long distance, Apple should be okay. And here's what I say about it. It's back to this green zone, which was an emphatic move up. So how bad is it this quarter? If it's really terrible, I bet you somebody will start saying, you know what, Tim Cook, you've had your time. Let's move on. Long term, that would be good for the company because I think he's an underwhelming CEO, to say the least, mediocre at best. So, and if it's not as bad as everybody expects, then hey, they might have a relief pop. I don't know. So it's a lottery ticket into Apple. I do have some. I traded it today. I have some profits from those intraday. I may book them and reopen a lottery ticket on Monday. I'm not sure what I'm going to do, but ahead of earnings, I don't go long Apple with both feet. If I do, it'll be credit put spread way out below 140 and way out in time. Something to just relieve the itch of trading something ahead on a coin flip. All right, so those are the levels. Really, there's nothing to be said other than that we're setting higher lows. But the good news about it is we're setting higher lows. The bad news about it is we lose it. That's the QQQ trend. That's the low of the week. If we lose it, those are weekly candles, then we may overshoot down to the next level, okay? So we do have some exposure. Here are the small caps. They're in best shape. This is the all-time high. We're crying. This is the all-time high. We're crying like, oh my gosh, how long is this going to last? We're 4% off the all-time highs. So perception, right? I'm going to extend this out while I have it. Coordinates. Okay, so this is the next level of contention and higher lows here. I'll draw the line right now so you guys can visualize it. Some people draw the candle wicks. Other people like to draw the stomachs of the actual closing candles. It doesn't matter. I'll put the wick. This way I don't overreact. Okay, so bonds, a long bonds, I put one in as a defense. Why did I do that? Because of what I said, it's a no-win situation. Well, how can I defend that? Maybe a long bond trade. Everybody's beating up on bonds. Oh, rates are going to the moon. This big red circle here, something big is going to happen in bonds right here. So we're about to see either a big breakdown in bonds, which would be great for stocks, but a rise in rates. Eventually be great for stocks, but we could react negatively to it. But so going long bonds here will say, okay, the bonds are not dead. They've been calling them dead for a long time. I just lost some money on the long bonds, but it was a hedge, so I put it again. The details will be in the write-up. All right, Apple, also I'll have 2 trades in the write-up, one lotto, one little less lotto-ish. IWM, I will have a trade in there, which basically the concept of it is if I want to go long the thesis, I can't remember if I'd shared the thesis. I shared it in writing this week, I know that. We have a potential huge pop in the market, a relief pop on tariffs. Today we had a massive headline with Korea, North Korea, South Korea shaking hands, meeting, lovey-dovey, and it looks like it was the doing of Trump. So some people tried to discredit him for it, but hey, if he had messed it up, they would have blamed him for it, so you got to give it to him. So my opinion is, I said it on paper, is that this is an olive branch from China to Trump, so he doesn't go all ballistic with the tariffs. Hey, ballistic, very apropos here. So if that's the case, then we should not have big tariff situations to the extent that everybody fears them. So the big tariff fear, which should be soon, we should be hearing that 30-day quiet period should be ending soon. I believe 5/11 is a deadline of sorts. I can't remember, to actually submit it in writing the comments from the comment period. So, 150 billion, I think we're fearing. Maybe they come out a lot less. And maybe before they come out, China actually implements the rollback of some auto tariffs. So That's the upside. And to trade that thesis, just like this is my fundamental assumption, I can put a trade to it, is that the small caps are going to get higher from here. So how do I do it? So I buy I'll write it up so I don't spend time here. The bottom line is I want to be cautiously long, not all in long, because it's one thesis and it could be wrong. I can do the same play with the Dow. The Dow is more volatile because of some of the names in it. So what is that I'm looking at, those yellow things? That's the hopium higher lows scenario. If they can tinker up to 248, this can come. I'm not saying it will come. I'm saying it's right there. That's my optimistic view on things. And so the Dow or the IWM would be two ways I can do it. I can do it with Qs or SPY or whatever. I use IWM because it doesn't have mega caps. So if somebody reports a bad number, it doesn't rig the whole thing. Speaking of rig has been a fun trade for me, and I've shared it. It's in a it's a big breakout on a weekly basis. So this is a possibility. It's a long shot, but it's a possibility. So I booked my profits, but a while back I shared, but I do see a potential for earnings on Monday, I believe, before the market opens. So this will be either somewhere up here or back down here. I have, what do you call that, house money in it. So I do have profits, but these are free profits. I'm going to let it ride. That's not like me, but I'm going to let it ride. YOLO, as they say. Okay, so Amazon, right? They reported a monster quarter. Monster quarter. Double the profits that the people expected. Double the profits from Amazon. So what are you shorting, people? I don't know what they're shorting. So it's up 4 or 5% on top of being up, and I don't know how much yesterday. It was up 9, 10% this morning. But you know, it's not negative, right? So whatever you want to say about it, it's not going to zero. It will run fast downhill if the market's correct. But how do I trade this? I go out in time. I don't want to fight here. I go out in time and I sell a put where I want to buy the stock. What does that mean? Can you believe it that I can collect, I don't know, $15, $16, $17, $18 maybe to sell a put down here? What does that mean? It means that I commit, if I sell one put, I collect $1,800. I'm committed to buy 100 shares. So there's a trade for somebody that wants to own Amazon at a discount. I get paid to buy it at 1080 if it falls to 1080. If not, I keep the money. Anyway, that's just one way of doing it. All right, somebody asked me about Bristol Myers, BMY. Technically, these set of candles look good. So, you know, a lot of greens, volatile candles, good solid base, they look good. But they have not started to eat away at these two massive red candles on huge volume. So an ideal entry point would be somewhere above this level. So 52.9, let's call it 53. If it's at 53, I'd be more encouraged because it would have cleared these highs and start to eat away at these reds. So easy come, easy go, meaning the ones that panicked out of it here, will they buy in? I would say, okay, I'll take a flyer on it and start buying debit call spread here. But there's earnings next week. So whatever you do here for it, I'll write it up. But you know that there are earnings. I think there are earnings next week. I looked it up and it wouldn't show, but I'm guessing from the last time it was early February. So give it 3 months. That's early May. So they should be coming next week. So I wouldn't put all the money in. Fundamentals, I don't know. PE is 20 something. I mean, it's a good company. It's been around forever. So these are my thoughts that next week is a massively important week. And we have two scenarios at play here. So far, we've guessed the price action almost perfectly. And it's trading within our expectations, so there's no panic. I looked at the open interest, and it looks like there's room to be up or down a little bit. Nothing yet evident from the open interest, except maybe for Google has some downside pressure. I booked some profits in Google here. All right, so Nick signing out. If you have any questions, let me know.